Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026 July 27th, and markets are staring at the Fed, oil, gold, and IPO pricing like a group chat waiting for one toxic reply.
Translation: everyone is pretending to be calm while refreshing bond yields every 8 seconds. We have the Federal Reserve's new chair facing a big test, oil prices doing parkour, gold acting weird, and an AI-linked Hong Kong IPO that says hype has a budget.
Story 1. The New York Times reports that Kevin Warsh, the Federal Reserve's new chairman, faces his biggest test yet at this week's policy meeting. He has said the Fed has no tolerance for elevated inflation, and now he must decide whether to push for an interest rate increase.
That phrase, no tolerance, sounds like a gym teacher catching inflation eating fries behind the bleachers. But for normal people, this is not just theater. Higher rates can hit mortgages, car loans, credit cards, and the value of growth stocks.
Simple version. Interest rates are the price of money. If the Fed raises that price, borrowing slows, spending cools, and inflation may come down, but the economy can also lose speed. It is basically tapping the brakes on a car while hoping the groceries in the back seat do not become soup.
I slightly disagree with the calm framing. Markets do not hear tap the brakes. Markets hear dad is driving and just discovered the emergency brake. If you carry floating rate debt, this meeting matters more than your cousin's hot stock tip from a barbecue.
Story 2. Bloomberg says whipsawing oil prices are muddying traders' outlook for the Fed meeting, while bond yields have surged heading into Wednesday's central bank decision. Oil matters because energy prices flow into shipping, airline costs, food transport, and inflation expectations.
Oil is the drama queen commodity. It does not just move, it enters the room wearing sunglasses and changes everyone's budget. If gasoline, freight, and heating costs jump, investors start asking whether the Fed has to stay tougher for longer.
The finance behind it is straightforward. Bond yields rise when investors expect higher inflation, higher rates, or more uncertainty. For households, that can mean higher loan costs. For investors, it can pressure expensive stocks and make cash-like products more competitive.
Story 3 is gold, and gold is doing gold things, which means confusing everyone in a very shiny outfit. Bloomberg reports gold climbed after a pause in fighting between the U.S. and Iran eased oil supply risks and inflationary concerns that had threatened tighter monetary policy.
That sounds backward at first. Lower geopolitical tension can reduce safe haven demand, but lower inflation pressure can also reduce the need for tighter rates. Since gold does not pay interest, it often likes a world where future rates look less punishing.
And then Laopu Gold enters with the less glamorous version. Bloomberg says Laopu Gold expects slower first-half revenue growth because demand for the Chinese luxury jeweler weakened as bullion prices retreated. So yes, gold can be a hedge, but jewelry demand can still act like a luxury handbag checking its bank balance.
Story 4. Innolight is said to price its Hong Kong IPO below the maximum, according to Bloomberg News as reported by Channel News Asia. Innolight is tied to the AI infrastructure supply chain, and the pricing details suggest investors still want the theme, but they are not blindly paying any number on the menu.
This is where I reverse myself a little. I usually roast AI hype because every company now says it has AI, even if it sells staplers. But pricing below the maximum is actually healthy. It means the market has not completely replaced valuation with confetti.
Actionable recap. First, check your sensitivity to rates. If you have variable rate debt, the Fed matters directly. Second, watch oil because it can quickly change the inflation story. Third, treat gold and IPOs as tools, not personality traits.
Exactly. Your portfolio should not be a mood board called Things That Sounded Smart on a Tuesday. Keep an emergency fund, diversify, know why you own what you own, and do not let oil, gold, or AI IPOs bully you into panic clicking.
That is today's Beyond Daily Finance show for BD Daily Finance News Podcast. If this helped you understand the Fed, oil, gold, and IPO signals without needing 3 espressos and a Bloomberg terminal, subscribe, like, and tell us in the comments which risk you are watching most this week.